Shifting to UMI, which focuses on midstream assets in the energy infrastructure arena, and a totally different exposure than the pure play of physical commodities. So how does the toll booth cash flow strategy provide a buffer for investors when the energy market gets volatile?
Well, the nice thing about UMI is, as you said, there's that toll booth. And the companies that are in the portfolio, a lot of them have these pass-through, inflation pass-through contracts for one thing. For another thing, they tend to be long-term. So you get a little stability in the product that you don't get with necessarily the underlying prices. So if you look over the last 5 years, and you look at what energy has done, there's correlation to energy, certainly, but it's less volatile than, underlying, oil, natural gas, you name it. It's also, like I said, in some cases they can pass through, actually in many cases you can pass through inflation. So it bears that up well. And you still have that energy exposure. So it's kind of a nice way to look at it from for an investor looking for total return over the last 5 years. It's beaten the S&P 500. It's right up there with oil itself, but a lot of oil's gain has happened in the last 6 months. So you get this more less volatile trend up that we've had over the last 5 years. They're good companies in the portfolio. So, of course, there's some equity beta there. But it's another way to play energy and maybe focus for people focused on stable income and also still participating in the energy story when there is an upswing. It's a nice way to do it.